Good afternoon, everyone. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video, read this disclosure. Thank you. And position disclosure, same as yesterday. I did not add back any UNG yet. Not yet. Didn't add any back. So lighter in that because we got to sell some in the bounce, and then decided to not add any back yet. Anyway, all right. So got some earnings out. Just to scan through them real quick. Looks like Disney, for the most part, was good. Missed on subscribers, but for the most part, they're treating it well. Disney's trading up after hours. Kind of was a little shaky there when the numbers came out. Looks like Hood is up as well. The numbers look... I see miss, miss, miss. But as we know, as this market has been trading, they are buying anything and everything, good, bad, ugly, neutral, whatever. So I see 3 misses on Robinhood there, but that's trading up. Apps, APPS, Digital Turbine, this trading down. These guys missed. Looks like a firm missed on guidance too. They're punishing that one. Probably buy it back up tomorrow though. We'll see. But this one's down on earnings. And what else? Win looked pretty decent for the most part. Not really moving too much, so not really trading too much. MGM looks like it's doing well. Those casino stocks have been trading extremely well into these reports, so not surprised to see good reports and seeing them trade up. Yeah, they're crushing this Affirm, down 25%. Alrighty, so markets. Inside day today. Week inside day today. I titled the video VVIX breakout, and then comma SPX week rest day. So I was going on the past like 2 days, pretty much all week I've been going on about how I think this market needs at least a week more time if we're going to keep this trend healthy and make a higher high eventually. And I think if we make a higher high before next week, we get overcooked. So coming into this morning after yesterday's close, we actually were already starting to get overcooked. That short-term tactical sentiment was overcooked, which we like to look at, which I was a little surprised to see. I thought that might only happen if we get that newer high, or that higher high, I guess I should say. So we're gapping down a little bit this morning, but it wasn't, sure we could fill the gap a little bit, but I guess kind of the theme today was the momentum is here, ride it while you can, but be very, very careful chasing, and do not chase after you see momentum come in. Basically, the theme of the day was like, don't chase, which turned out okay. So let's just look back to the action, I guess. So we opened decent gap down after yesterday afternoon, just absolutely crazy, right? Big move up, bigger move down, even bigger move up, pull into the close, but still ended up being overcooked after yesterday's close, which, I guess makes sense. We closed way off of where we opened. So we gapped down this morning, try to fill the gap a little bit, only really get to this ADMA on the 5-minute / this 414 level. SPY pretty much has levels like every $2 or so it's kind of been respecting as somewhat of inflection points. So like 416, 414, 412, 410, so on and so forth. So SPY gets up to 414, gets rejected with this ADMA as well, comes back down, makes another run, can't get over 414, even breaks the day high there, but really just stopped at 414, immediately gets smacked right back down, and really rolls over. Then at this point, 410 was really kind of the line in the sand that bulls needed to hold if they have any chance at saving this momentum. The line in the sand that bulls really need to hold for like this uptrend is more 400. Where's this daily chart at? There we go. So that's our recent higher low. So higher low, higher low off 400, higher high. Yesterday, it was possible 2 days ago. Yesterday, possibly confirmed that. You don't technically confirm until you get a higher high. But yesterday was a possible higher low in what is, I've been saying, turning into a parabolic uptrend, as this market has been buying anything and everything. And it won't last forever, but it can last for days and weeks on end. It's been going on for weeks already at this point. So possible higher low off yesterday's low, needs to get a higher high to confirm. But again, if we don't make it, only confirms if we make that higher high. So if we don't make that higher high and we lose yesterday's low, that's still not breaking the uptrend. Only really under 400 would be breaking that uptrend, technically speaking. And again, I've been going on and on about how these gaps are really wide between the 8 and the 21, and they really need to get smaller before this market wants to keep pushing. And if the market does keep pushing, it's going to get overcooked. So all that being said, again, technically speaking, SPY could pull back to 406, 405, bounce off the 21 EMA, make a higher low that ends up being at like 405 off of 400, and that's our higher low. So theme of the day was patience. Rolled over, ended up holding this kind of line in the sand for momentum. Again, yesterday's low, you losing yesterday's low today would definitely kill momentum for sure, and would just leave probably anyone and everyone that trades a little bit annoyed, who traded in the last 24 hours, who traded this. And whether you're short or long, this move higher, this move lower to new lows, this move higher, and then if we were to gap down and lose today's low after that move yesterday afternoon, I mean, wow, right? That really shouldn't happen. So if you recall from yesterday, 410 to 411 was kind of that inflection point where we broke above it, we got back below it, bounced to 410 here, then got back above 410. So, you're above, you're good. You're below, you're not good. You're back above, you're good. So rolled over into extension into that 410. And I know some of us were shorting some things in the morning. Some buys, some of us were doing a little bit of buying coming in here at 410. The problem, again, with some of this buying was, it seems today, like, we shouldn't break yesterday's low. Anything's possible. We shouldn't break yesterday's low, though, especially based on the move from yesterday afternoon. At the same time, though, after we've rolled over to 410, the upside seems a bit capped. I mean, we're seeming a bit weaker than we really should be, right? This 410 really needs to hold, but you'd like to not even be here after that move yesterday afternoon. Bulls would have liked this gap down to maybe consolidate a bit and then work its way higher. So 410 did end up holding, but you can't really say this is a fantastic close. We held yesterday's low. We held 410. We're above the level. Similar but different to like down here where we didn't break down 380, right? It's holding the level, 380 to 375. It looks like you're going to break down. It looks bad, but you didn't break the level, and we ended up breaking up. So similar but different situation here. This isn't a great candle, but we technically held levels, so we're okay for now. But there are warning signs out there. First of it being all of what I just explained. The price action from today was a bit weaker than it probably should have been. Some things out there I noticed, like this Apple had an inside day today. I was looking for this to have an inside day, but this morning before the market rolled over, when Apple was trading in the 153s, 154s or so, that inside day was looking more like a, I don't know, maybe not necessarily this candle, but just like a small candle in the upper range of yesterday's candle. Now, I guess it has a little tail. It didn't close at lows, but more of a red candle there. This Microsoft was really extended this morning from the Google news, rolled over in a pretty big way. And the Google news, pretty funny this morning, but Google got hit in a big way today because their AI got an answer wrong or something like that. So Google just wiped out a week today, right? All of this just got wiped out. Back under 100, close under 100. So that Google chart's a bit broken now. Amazon closed. Did it close? It closed at 100.04. So it closed above 100, but it closed above the level. You can't really call that a great close either, though. This chart, not totally broken, but it looks like it's risking getting broken. Apple's still above 150, so that's still okay. Netflix is kind of in its own world. Meta, also kind of in its own world, but weak today. Still just a huge earning. It's holding the earnings gap, though, so that's okay still. So the first part of what I titled the video, VVIX breakout day, that's the biggest warning sign I think we can take away from today. This 88 level has been resistance in VVIX. It's been a level, honestly, I'm sure for a long, long time, but in recent time, since November, October, which is when the market made its not all-time low, but like the low in October, that's when the VVIX gave the big negative divergence. The market made a new low. The VVIX made a very clear and obvious lower high. That pursued into November. We bottomed out, yada yada. This 88 was resistance all throughout November. We broke above 88 here. When was this? Middle of December. So when we're breaking above 88 in the middle of December, that's when the market is doing this, it looks like. Yeah. That's probably when the market gapped up and the VVIX probably like gapped up this day or something. So we had that pull. That's when the VVIX broke above over 88. That faded back down and it never really went. And while that faded back down and never really went, the markets looked like it was going to break down but never really broke down. VVIX was below that 88 too, so it was below the 88 level. Market never broke down. Another negative divergence from VIX. Market broke up. And now today, a little history lesson there. 88, and now for past 2 weeks, 88, 88, 88, 88. And now today, big gap and go. Big gap up over that 88 level, gapped up to like 90 or so. Big up day, strong close. VVIX closed at the highest point today since that October, since way back in October. Still below 100. 100's key here. Over 100 is when the VIX really starts to expand. But this is very, very, very notable. Very notable. That's the biggest warning sign I'm taking away from today. It's something everyone, I think, should note. Doesn't mean run for the bunkers or anything, but it's something we got to watch going forward this week for sure. The VVIX is a great, great, great early warning sign. It's been good. It continues to be good. I'm going to stick with it until it's not good. And for now, what this is telling me is if I'm only looking at the market, I'm saying it's an inside day that still held levels. It's weaker than I would have liked it to be, but we're still holding, so we're still okay. But if I'm looking at this with the market, I'm saying the price action was weak today, and the momentum party might be kind of vending here. It's notable. It's positive divergence in the VIX market, which is negative for the S&P. The opposite of, again, those scenarios I just said when the market broke up, like back here in when is this, like January or whatever, when we really looked like we were going to break down 3,800, 375, we really, really looked like we were going to. And this VIX was under 88 on Friday, January 20th, Monday, January 23rd. On those exact days, oh no, I was getting my timeline wrong there on the VIX. So what day is this then? Now I'm just curious. January 5th. Oh no. I'm getting my timeline wrong on this, but you guys get the point, I think. I'm just kind of rambling on now, but I assume most of you guys get the point. I've talked about this enough here. It's positive divergence, which is opposite of negative divergence. If the market looked like it was going to break down or looked 50-50, but the VVIX was either trending down or just calm and under resistance, I'd be more bullish. But the market looks 50-50 and is holding, and this is breaking out. And again, just closed at the highest point we've closed at since way back in October. So a little bit of a rant and ramble on there, but it's notable. It's an eye-opening wake-up candle for that VVIX. Warning signs can be negated in a couple days. They can be negated the next day, so we'll see if that gets negated or not. But this has been a month-plus long buying spree that really started to kind of turn parabolic, and has been really momentum-driven to the point of it sort of felt like 2020, 2021 in some ways, where every penny stock A, B, and C is coming out with an AI headline now, and they're going, and Bed Bath & Beyond got saved, so it went up 100% a day, and some like froth seems to be around. Financial conditions have eased in a big way, yada yada. I don't want to start going off too much about the bigger picture, but point being, it's been a heck of a month or so. It's been a lot of buying. The momentum came in. That's happens when you top out. You top out in two ways, right? You either kind of get overbought and overshoot, or you exhaust and roll over. Usually it's you exhaust and roll over, but this was kind of the latter. We really got a big spree of buying here. To top off not only like short to like bigger picture stuff, to top off not only short-term tactical sentiment, but the fear greed index that I look at once in a while. It's from CNN. It's public. You can just go on CNN Money and look at it. Look at this, extreme greed. I mean, I haven't seen that since, this is a timeline going back for almost all the year. Definitely haven't been up here all year. I definitely haven't seen that since before the market topped. So you can't, for a long time it was a bear market and we're looking for the market to go up because of positioning and no one's in and blah, blah, blah. But that's not the case anymore. People have bought into the market. Sentiment is not, this isn't fearful sentiment, and this isn't a day thing. The short-term tactical is like a day-to-day. This is a little bit bigger picture here. Extreme greed can last, right? But just things to note for sure. So some warning signs out there. Market's still strong, but after, it's a bit weaker than it was yesterday for sure, with some warning signs coming up. And then so that's really it overall. Going forward, we have CPI on Tuesday, the 14th, which at this point, tomorrow is Thursday. For a second there after yesterday, it felt like we might really blow and go make a higher high and really extend there. Now after today, I think, all right, let's take a breath and wait for CPI is probably going to be the theme going forward. So some warning signs out there, but that doesn't mean we immediately break down either, because we got CPI. Tomorrow's Thursday, and then it's Friday, then the weekend and CPI. So probably a little bit choppier and more selective going forward into that. I kind of was thinking that's what was going to happen, and then today's price action should confirm that. Yeah, I think that's all I really got to talk about. Any plays from today that were great? Tesla. Oh no, wait, that was 2 days ago. Yeah, nothing really. I mean, it was so mixed. Again, like, theme coming into today was momentum is there, but don't chase, be careful chasing. If you see momentum early, try and ride it, but don't chase. So like DAL got upgraded. This had a great setup, but market was overcooked coming into today, so that didn't work. LUV got downgraded. If the market was momentum strong up, this most likely would have gone up today despite that downgrade. But did not. Yeah, nothing else really to... Did Baba hold 105? No, it didn't. Not a great, really, candle there from Bob on that chat. Whatever, AI stuff, more AI stuff. Piton had the inside day. It broke the inside day to the downside, but held this 8-day. Look at the big gap there. That's from earnings. Yeah, nothing great. Nothing too great from the morning, really. Yeah, I think that's all I really got. Not the easiest day, but I think we were well prepared for it to not be the easiest day, so hopefully no one's getting burned chasing or anything like that. I think we did I really tried to tell you guys not to chase, so hopefully, no one really got burned. Did Tesla close above 200? It did. 201, 201 though. A big, nice level like Tesla, you're not buying through 200 to get 201. So, good day for Tesla, good close. Still 15 extended. I would not be surprised to see that back under 200 in the coming days. Yeah. Turn it over to you guys. Any questions, comments, anything like that? Let me pull up the YouTube as well. Make sure I don't miss anything there. I don't see anything on YouTube. Hey Pat, Trey, just curious, what are your thoughts on getting your personal profit target for the day and then reducing risk when you are close to it on additional... Let me turn the scrolling off here 1 second. Okay. Getting your personal profit target for the day and then reducing risk when you are close to it on additional trades. I know Derek says to use a daily P&L stop loss when you are at your daily target. If you make 500 on a stop trading, yep. But what if you are close to that target and don't hit it? Then keep trading and grinding into red. Sorry, long-winded question, but not worded eloquently at all. So there's definitely not like a black and white one sentence answer to your question. Obviously don't worry too much overall about your P&L, your overall P&L. It's more, just manage your individual names. So obviously don't have too many names to the point where you can't handle it. And it doesn't mean you can't handle it. Usually just what happens is you care less or just forget to watch something or get too loose with it and you risk 50 cents here, and here, and that is more than you're really prepared for. Manage the individual names and the math on those, and if you manage those properly, then the overall is managed well. That's kind of a little bit obvious. When you're saying you're close to it, but you don't quite hit it, and then just to quote you, you're saying then you keep trading and grinding into the red. Part of it, time and day too. For the most part, the later on you go into the day, the worse. Not like the worse the trades get, but they just get harder. They're usually second or third tier buys. The risk reward isn't as good, so you shouldn't be risking as much per se on those later trades. I think don't worry about overall. I don't think you should have a daily profit target. I think you should, if anything, I don't think it's a bad idea, but I don't think you should have a profit target for the day. I think you should have it on individual names based on what you want to risk on individual names. So if you only want to risk, $100, You should hopefully be making at least $100 in the upside on that trade, if not 200, 300 plus. And if you get and it's just about if you get a day where you get 10 good trades, you're going to have a great day. If you get a day where you only have one good trade and you're a disciplined trader and only take that one good trade, you're going to make much less on that day. But that's how you have those. Derek always talks about those upsized days, and your bigger days need to be better than your loser days, right? And you really can't have those outside loser days. And if you're a disciplined trader, that's how you do it. You make a little, and that's naturally just how it's done anyway too. I'm saying that's what you should do, but at the same time, that's just how it happens. If you see good traders do it, they eke out some cash flow, and then on the day where you probably should be putting a little bit more risk on, and you put that risk on, and those trades work, you have that outsized day. To the point now that I'm talking out loud, where I would almost encourage you to not have a profit target on the day, because having a profit target on the day could cap you from having a bigger day when you should have a bigger day. You shouldn't, if you're doing the best things and having good trades, a normal day like today or wherever where we're just resting shouldn't be the same as a Fed day or a day like yesterday. There's more trades, there's more movement, there's more opportunity. So, yeah, I think that's how I would answer your question. I guess isn't like a direct answer, but I wouldn't have a P&L target for the day. I'd have it on individual trades and individual names. And once you get, more practice or experience or whatever, and you start to take different trades, there's different risks for them. For me, I certainly risk more on a swing trade that I have conviction in and I'm giving more room, versus a day trade that is just whatever. Oh, looks like this level's holding, I'll take this for a day trade or something. That math, that's all the game plan math that you got to do. So yeah, sorry, kind of a long-winded answer, but it's a good question. But yeah, I don't think you should have a daily P&L targets. I think you should have it on individual names, and that way. And then if you're a disciplined trader, if there's one good trade a day and you take that one good trade, then fine. You don't have to force it to make your daily profit. But then if you're a disciplined trader, a disciplined trader doesn't necessarily mean don't trade and don't take losses. It also means if the signal comes, hit the button and take the trade. So if it's a great day and it's a Fed day and there's a lot of movement and you're getting 10 good trades and you're taking the trades, you're going to have like a sick P&L. Like that's going to be your best day ever. And you're going to be like, wow, I never even, wow, that's how you're going to do it. So yeah, hope that all makes sense and helps. Dave asks, I took a trade on SPY today at 10:05 short due to getting an inside and down on the 15-minute chart. I got short with a stop order about 3 or 4 cents below the previous candle's low, and from there pretty much shot back upward to market highs, which is where my stop was. Classic. Pretty much as soon as the stop triggered, we went down the rest of the morning. Is there anything you could see that could have prevented this from happening? 10:05, you're saying? Oh, sorry, I don't mean to laugh, but just it's funny like how it happens like almost too much, where it used like the way we break day highs and break day lows, like that used to really not happen as much. And but markets change and evolve over time, right? And it's to the point where you almost have to expect that. So trading with outs, knowing that, is much harder. Let me reread real quick. 10:05, you got short, inside 5 and down. Yep, I like the trade. I don't know why you would put a stop 3 or 4 cents below the previous candle's low. To me, that sounds like you're cheating yourself out of 3 or 4 cents of a good price. Personally, honestly, I so think about, like, I don't want to complicate your trading too much, but with how slippage works and how feedback cycles of selling leads to more selling work and stuff like that, if you're doing it 3 or 4 cents below the last penny low, and trader X is getting stopped on his long a little bit above the high because he wants to make money, and then trader Y is stopping out at the low, and trader XY is getting short a little bit above, and trader X is getting short at the level. You're just, I don't know. Personally, I would rather cheat a little, maybe even a teeny tiny bit, and almost help the cause. So I would not do that 3 to 4 cents below. I would definitely do it at the minimum a penny below, but personally, I do it some at or even a little bit above. Because even sometimes when it's at, you still get the slippage. But if you're like, I don't want to be the guy that's getting the price 10 cents below because of slippage. I want to be the guy that's hitting the bid that's causing this print to go off, that causes that guy stop to go off, that causes that to go off, that causes that selling, and I'm in the money real quick. And if I'm not in the money real quick, that's also a sign that the trade might not work well. So sorry, I know that's not what you asked, but just I'm not really sure why you would do 3 to 4 cents below, unless that's not what you did. But anyway, so there's nothing you can do definitely to prevent that from happening for sure. I'm not sure if you were able to. You probably did not get risk covered on that, eyeballing it. The only thing you can do here is retry. There's a lot of people that ask me these types of questions. Someone, I think Nick or someone asked me like this today. There's nothing you can do to prevent this from happening. The only thing you can do is retry the trade. Again, knowing that if you're trading well, you're not taking trades that you think you're, getting 1-to-1 risk reward is good, but you don't think that max reward is 1-to-1. That's not a good trade. You should be thinking, I probably can get 1-to-1, but if this really works, I could get 1 to 3, 4, 5, 10, so on and so forth. And because of that math, it makes it so you can try something 2 times, 3 times. It could fail even 3 times, and if it really works well on the 4th try, you'll still end up making money. So I don't think there is anything to do to prevent that from happening, Dave. That's really annoying. I'm sorry that happened. Happens all the time. Happens to me almost every day. I think you just could have seen it stop you out, seen it make a new day high, and what you tell yourself here is the market is making new day highs. We just wedged out, broke up from that wedge, made a new day high. We should try to fill the gap, try to go green. We'll see what happens when we go green, and then so on and so forth. That's what should happen with SPY breaking new highs, right? It goes back to when I talk about stops and the theory behind stops of how theoretically you should be flipping every time you stop out, because you are stopping out, you're stopping out of your SPY short here because you think this can go higher. It should go higher. That's why you're stopping out. You're getting out right here, right now. SPY's going higher. If this level breaks, let me get out right here, right now, because it's going higher. That's why you're stopping out. If that's not happening, why are you stopping out there, right? So you see SPY break highs, 414, a level as well from yesterday. This should try to go green. It doesn't go green. Big fat red candle comes in here. Maybe you can sneak in versus 414 up here. Otherwise, you got to see this big fat red candle and try again and be slightly annoyed that you got stopped out here. But, I mean, you see what happened, right? And you said it yourself. SPY ended up rolling over the rest of the day. So nothing you can do to prevent that from stopping you out. You got to respect your stop if it's a good stop, which I would say that is a good stop. But again, that's a good stop. If SPY breaks the morning high, if SPY breaks this wedge to the upside, this thing's probably going to go green. It's a strong market. And it broke the high by a couple pennies, 414, and that's it, and smacked right back down. So yeah, I hope that helps, Dave. Sorry that happened to you, but it's not unusual in this market. And knowing, sorry, just to add one more thing too, like think about this. This helps me. This would help me a lot with my trading when I really started to kind of improve, whatever, a couple years ago or something. Your trade is based on the level and charts and whatnot, but it's an idea too. Like it's a theory behind it. You know, this is going to go up because of this and this and this and this. This is going to go down because of this and this and this and this. It's not. It shouldn't be as simple as just, little 5-minute candle here. So this is going to go down or up. So like if you're short in SPY today, maybe you're just doing it on that 5-minute chart pattern, but hopefully you're doing it because you're thinking the market's overcooked and you know where the big picture is and the daily charts, and like you got all that underlying information behind your trade to help give you your conviction for your trade. So that helps add your conviction to maybe possibly try it again where, okay, SPY's breaking highs here, it's stopping me out, that's pretty annoying. But I still, even though SPY's breaking highs, it should go green. But the market's still overcooked. Like even if SPY goes green and continues higher, it's still overcooked. Like the short is still there. You just got to get in at a good area. So that might, like, having those ideas and theories to help with your conviction behind the trade and not having the trade just purely being off of a 5-minute candle, but having like an idea. I guess what I'm trying to say is an idea as to how the money is going to flow and why the money is going to flow, because that's all it is at the end of the day, is just the money flowing around, just flowing around, right? That's what moves things. So that if you have that with your trade, that can help you stick with it. And I'm not saying stick with it, don't have an out, but stick with it to, try it again, revisit it right here. Maybe this goes green, puts a shooting star in at the green to red, and then does this rollover. So you revisit it at the 5-minute shooting star at the green to red area before that rolls over. Maybe this goes all the way, pokes a new day high over yesterday's high, then makes a shooting star and rolls all the way over, and you revisit it there. And you take 1 or 2 or even 3 losses, and then that 4th time, your theory, your idea ends up being right. It was just, you were too early at a couple of the spots, but that 4th time pays you 10x or more. You've risked 50 cents and made $5 plus, which is very, very doable in SPY, risking 50 cents to $1 to make $5 plus. So yeah, just to add that, Dave, because I see it a lot and I feel bad, and it happens to me too, but like, I know how it feels to get stopped out on an idea that works. It's the worst thing. It's one thing to lose money when you're wrong, but to lose money when you're right, I hate it. I get it. So that's why I really try to help and figure out, for my own sake as well, ways to, not avoid it, but capitalize on the idea. Like, right? It's your idea. It's a good idea. The information's good behind it. Capitalize from it. So yeah, that's that rant. Let's see if I got a rant number 3 with Rex's question. Hey Pat, I shorted NVIDIA right at the 10:15 candle. Thinking it wasn't going up with the market at that time, although it showed some relative strength at the open. NVIDIA's also been the strongest on the daily in terms of like the chips and everything. NVIDIA's definitely been the strongest there, so hopefully you have that in mind. Upside tails had me thinking it can't break higher. When I see the inside 5 at 10:15, I started short. Do you think it was a good trade or just luck? Inside 5 at 10.15. No, it's a good trade. I don't think that's luck. It's a good trade. Um, all the information you just spelled out to me is great. Hopefully, you're also keeping in so hopefully you're keeping in mind that it's a strong name on the daily. But yeah, that was extended there. You got that daily extension. You're thinking that the market's overcooked slash the market's overcooked. Upside tails, which is great. I always point that out, right? Tails is something to notice. Even if something's like this Nvidia open here, it's not strong bar, strong bar, strong bar. You got all these tails, and it tells you that there's buying and there's more buyers than sellers. That's why it went up. But there is selling, starting at whatever. What is this? 227, 227 and up. They sold over 227. Sold, 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 sold. That got sold every time over 227. And then you had a tail up to 227 that didn't get through it. Got back down. Another weaker tail. Yeah, I do not think that was luck. I think that was a great trade. Great trade. Good job, Rex. Great trade. Hopefully, so I don't know how you trailed it either. Personally, this rolled over. You can't really. I guess maybe you can trail down to here, which you would have gotten stopped out of here. That's still a good trade, though. It's a good trade. Yeah. Good job. Hey, Pat, something I coded in Python, confirming what you said. Cumulative tick versus S&P 500. Tick tends to lead by a few weeks. Interesting. Wow. That's a great graph. Who posted this? Trade 117. That's a great graph. I love that chart. That's a fantastic chart. You should tweet that. Maybe you'll get famous. But solid chart. Solid chart. You can see that. I mean, it's a great, like middle December, that uptick in the tick, while the S&P looked like it was going to break down but didn't break down, and the VIX gave another negative divergence. It's super interesting. Hey Pat, how do you use VWAP? Do you sort of look for bounces off the VWAP or extension from VWAP for reversals? I don't look for extension from the VWAP. No, only moving averages. Can it be viewed as a pseudo intraday support and resistance? Yes, it can be. Yes, that's how I use it. A pseudo intraday support and resistance. The same way that your 5-minute ADMA and your 15-minute ADMA and your 30-minute ADMA are also intraday support and resistance, even though they're not, right? They're not. They are not. Wink. But sometimes they act like it. Sometimes they don't at all. Sometimes it just blows right through it like it's not even there. So same thing with that. I would probably weight that highest for intraday support and resistance, as like most important. Usually, it's notable. Again, I don't really care about the extension thing. That's more ADMA for me. But it's notable if something is above or below the VWAP after the opening 30 minutes or hour or so. That's notable. So, yeah, I hope that helps. A couple of questions. As Tesla was bull flagging today above 200, where there were multiple touches of the ADMA, this is a scenario. Maybe we tried to build cash flow before the real move occurs. Example, buying small size as it gets towards 80 and selling on highs, trying to build some cash flow. So I'll answer that one first. First of all, in general, I will say the building cash flow thing is, in my opinion, more something you should be doing on a daily chart swing basis, not an intraday basis, really. Because your intraday trades should already be based on daily charts in the first place. But let me just answer anyway. So it's bull flagging above 200. I assume you mean maybe over here, maybe over here. Buying small size. Do you mean the morning or the afternoon, Kyle? Let me ask you that first. Oh wait a second. But okay, the morning. Um, you could do this, but I don't think today was the day where any, I don't think you should be looking for the real quote unquote move through Tesla 200, because the real move through Tesla 200 is like Tesla 220. And that, not in a day, but that sequence should happen. That's like that should happen um, on a real move through 200 at the same time. This is like a day 6 7 up or whatever. The market is overcooked. Tesla is certainly correlated to the markets. Um, so yes, but I'd rather do that really on I. It's more of a daily chart thing to be building for cash flow before a bigger move. Um, so, for example, one I always kind of use recently because I missed it and I'm still mad at myself for it is this FCX. This FCX 40. Whoops. I just double clicked on the wrong thing. Sorry, I keep clicking on the wrong thing. Just making my computer lag. There we go. So this FCX 40, I don't know, and I can't get the intraday chart right now, but I don't know what the intraday chart was. Actually, I could tell you. If you're building this 40 breakout for FCX, if you're building intraday, doing that cash flow intraday thing on this day, this poked 40 and closed at 39.84 and then gapped up the next morning, you're probably missing that. Versus if you're doing it on the daily chart basis and you're building in versus the daily levels, you're capturing that. So yeah, I think to answer your question, Kyle, or the first one, no, I wouldn't really do that. You can do it a little bit, maybe versus like the day low or something. Say you think today's the day Tesla goes, and you're doing it versus the day low. But I wouldn't really do it any tighter than that. Otherwise, that's just too tight. Too tight. And in general, I'd rather be doing that on a daily chart basis. For that FCX is actually a great example why too. Because if you're thinking today that day is the day that 40 goes, and you're fighting that thing all day and just keeps breaking. I'm sure it was just breaking above 40, getting rejected, breaking above 40, getting rejected all day. And at the end of the day, you have a break-even P&L and you traded a boatload of shares. And then the next day it gaps up to 42. You're missing that. But if you're doing it on like a more of a daily move, which that's how you should be trading based on a date. You're looking for a daily move, so trade the daily chart. You're in that base and you catch that overnight move. Question number 2. Today I had trade ideas for DAL and CME, both of which triggered at the open. Any recommendations for approaching the open? If you have more than one ticker, trading right at their key levels. Example, how to get long both simultaneously. So it's, say, I assume DAL you were buying through 40. Wow, CME. Did they report earnings? Did I miss that? Maybe that was yesterday? I'm not sure what level you were buying through. Were you buying through a level in CME? What was your level? I assume DAL 40, CME 178 on earnings beat. It looks like CME gapped and went over 178. So, I mean, in this situation, you would have had to see the gap and go over 178 and try and hopefully buy under 179 versus 178. And then DAL, you can just have your buy stop in at 40. But to answer your question more generally, if you have more than one ticker trade, I mean, have multiple. There's not really a great answer other than having multiple level twos up and making sure you can see all your quotes at once and not biting off more than you can chew, really. Um, be quick with getting your orders in, have your stops in, have your profit taking, your sell orders in or whatever in case it pops really quickly and then drops. You want to at least sell some to get your risk covered. Yeah, honestly, yeah, just multiple level twos and being quick. And if you can't handle it, that's fine. Pick your favorite. Um, for the most part, though, too, like you're probably not going to have a situation where market opens at 9:30 and if you didn't get in the trade in literally 2 seconds, you miss the trade. Like that's a little bit too tight. Like you're usually going to have 30 seconds, a minute, 2 minutes where you can do a lot in a minute or two. You can put a lot of orders in a minute or two. And you'll usually have a minute or two. So, yeah, hope that kind of helps. I don't think you can private message each other, but feel free to exchange emails maybe. I can share emails with you guys privately as well, but I think only like admins can private chat. Follow up question, if that's okay, of course it is. That trade in a vacuum is something where if you do it once, this might happen, but if you do it 10 times, you end up making money on average, and therefore still worth taking, right? And also, yes, my profit target once risk covered. Yes, that's right. And again, like, have that theory, that idea, that, I can't really think of a better word than theory right now. But, ideas, layers of probability, I guess is a way to put it, as to why your trade should work. The market, you're short in spot today because the market's overcooked and the market is due for a down move. Is the down move from 410 to 405? Is it from 412 to 407? Is it from 415 to 410? Right? But having those layers of probability will help you stick with it, and therefore, yeah, exactly what you're saying. If you do it over time, the math will work out. So yeah, and I'm not saying again. I'm trying to be state very clearly that I'm not saying fight every trade and retake every trade and try every trade multiple times and this and that. Um, but like respect your levels and have that idea, that those layers of probability, that thesis behind that trade as to why that trade's going to work, and it'll help you stick with it, and retry it. And again, just talk, say to yourself again, you're stopping at a SPY here because SPY should go higher. Where's the next area? SPY's still gonna have a down move. Guess it's not off the open really. Where's the next area? Maybe red to green. That's probably the next area where it should pause. Where's the next area if it doesn't pause over that? Probably yesterday's high. And then at that point we'd be looking at like the $10 plus extension areas. But just have your know your levels below, know your levels above, where if it gets to that level, it should pause. If it doesn't pause and blows through, what's the next? Yada yada. So again, that'll help you stick with it and revisit it. Where, again, I'm not saying fight every trade, but like this broke the high, it should continue. It didn't, so I think that's valid to retry it there. If it broke the high and didn't do that, and you immediately reshorted it, that's different. If it broke the high and you are patient, and then you saw a 5 minute star coming up, 5 minute shooting star coming up here in like the red to green area, that's a valid trade. So yeah, I hope that all helps. Yeah, unfortunately, I don't think you guys can private chat with each other. Sumo headline 14. Wow, nice. Congrats, Penny and Derek, and anyone else in there. Very nice. Do I use VWAP for every time frame? Just intraday, DJ. Just intraday. Let's see. Oh, YouTube. What's up, Sebastian? Hey, Pat. Would you take the IWM break of the three inside fives at 10:15? The break higher, right? Personally, no. Because what level is that? 194, 195. Honestly, probably not, Sebastian. The market was overcooked coming into today. We did gap down a little. If you're thinking we fill the common gap and go red to green, maybe you're buying. I'd be trying to buy earlier, but if you're thinking we go red to green, buying 194 and low 194 I think is okay, but buying through 195 is more of a chasey type of play, kind of, which I was trying to not do today. Some days it's fine to do that because you're not, chasing can also be adding fuel to the momentum fire, right? Like adding gasoline to a fire, fighting fire with gasoline. So, but yeah, if the day's setup was different and it looked like the market really could go, and the market had been consolidating for a week, which it might be about to do in a CPI, then sure. But personally, no, because as much as that looks good, I'm not convinced that the market is breaking yesterday's high and having a move even higher than that. And if you're not convinced of that, then your upside risk, your upside reward is a little bit capped there. If you think about it that way, if that makes sense. Do I ever mess around with day trading T triple Q? Yes, for sure, all the time. Not as much lately. I bought T triple Q for a swing long, um, 17 and under. Another one that I sold too soon. I've had a lot of good buys this year that I sold on the way up and didn't trail a piece at all. So that's another one that I might not get back. We'll see. But yeah, I do. Honestly, after the reverse, I used to trade it a lot more. After the reverse split, though, it's a little too cheap for day trading for me. And what I mean by that is for every, and let me just look at these charts to confirm. So Q's, this is 310 to 311. So Q's, and this is 20, yeah. The T triple Q before the split used to move roughly the same. If I remember correctly, maybe it was a little bit less, but roughly the same as the Q's dollar-wise. Meaning, if the Q's moved up $1, the T triple Q would move up $1, and vice versa. And obviously, it's a triple leverage product, so QQQ going up $1 at 300 is a much less percentage than whatever the T triple Q was in the fifth. I forget what it was exactly. It was low 100s or something. That's different percentage wise, and that's how you get like that leverage difference. But now after the split, as you can see here, like QQQ ripped up $1 here, and the T triple Q only did like 30 cents. So I don't trade it honestly as much as I used to for day trading. For that reason, I'd rather. Some people are different. Some people would rather a cheaper thing and would rather get more size. I don't know. We get charged commission for volume, so theoretically, if one thing makes $100 and another thing makes 100, and one thing you have to buy 100 shares and the other thing you have to buy 1,000, it's going to cost you more for the 1,000 share trade. Therefore, you should do the more expensive one. So for me, I don't mind the more expensive names and spreadier names because you just size down. You just size down, and you know. So yeah, I don't know if that like helps or whatever for you, David, on YouTube, but I don't do it as much. Some people are different though. Some people like the cheaper, tighter stuff, but I'd rather try to make $1 on smaller size than try to make 20, 30 cents on considerably bigger size. But that's me. They trade the same though. Looks like I got through everything. Looks like I got through everything in the VTF as well. Alright, so tomorrow's Thursday, 2 more days this week, and then CPI on Tuesday. More likely than not. So, more likely than not, basically, I was saying we need more time sideways before we make a real move higher. The 8 and the 21, this gap needs to close or at least get a bit tighter. That I was unsure that might happen after yesterday because of all the momentum. Now, after today, that looks more certain. At the same time, VVIX is giving us a warning with its breakout today over 88. So we should at least hold up and go sideways. Perhaps we do get a bit of a more of a price correction though. And again, the last pivot is 400. This was possibly going to be a lower high, but that's not confirmed until we make a higher high. We haven't made that high. Technically speaking, quote unquote, SPY could pull down to 405 and make a higher low off 405 and still be okay. So yeah, we'll see. Rest day today, a weak rest day, some warning signs sprouting out. We'll see if those warning signs develop into anything tomorrow and into the end of this week. And if they don't, we'll see if those warning signs are holding true into CPI, and we'll see how that ends up with CPI. And that's where we're at now. So looks like I'm through everything. Everyone get some rest tonight, and we'll see you guys tomorrow morning. Have a good night, everybody.